Hello students, I am Ms. Naziya Patvegar. Welcome you all once again to my YouTube channel Ilm Express. In my previous two videos, I discussed about fund flow concept wherein I explained that what it is, how it is and how important it is. Then in the second video, I discussed steps, format, problems and some solutions on schedule of changes in working capital and on funds from operations. Today we will be discussing the format of fund flow statement and a small problem on fund flow statement. So let's get started students. Once again, I would like to tell you all that to your right hand side there is a down arrow key button for description. In the description box of my video, I have provided the link of my previous videos and the questions related to this video. So please do press that button and just check out the questions that I'll be solving over here. So let's get started, and I'll be giving you all first the format of fund flow statement. See, in my previous videos I had already discussed that fund flow is, if you are new to my channel, please go to the previous videos and learn the concept, because without understanding concept, learning problems and solutions is not going to help you all. So in my first video I told you all fund flow is nothing but change in working capital, and in my second video I told you all there are 3 steps involved, that is preparation of schedule of changes in working capital, which we did in the last video, and the funds from operation, that also we did in the last video. Then now we will be discussing the fund flow statement, that is the third step and the last step. So fund flow statement format of fund flow statement. Now when we are preparing schedule of changes in working capital is all about your current assets and current liabilities. So if you imagine a balance sheet, current assets and current liabilities are going in the schedule of changes in working capital. Then we have P&L account. P&L account items are going in funds from operation. Then what is remaining? Fixed assets, fixed liabilities. So those items comes under fund flow statement along with some other items. So now there are 2 parts in which fund flow statement is divided. One is sources of funds. And applications of fund. Sources of fund and applications of funds. So here we are going to show what are the sources through which we are getting funds. Application, with this we record the transactions where we are applying the funds in the business. So here students, as I told you all, some of the current assets and all our current assets and current liabilities we record in working capital. Then schedule of changes in working capital, P&L items in fund from operation, and what items comes here? Fixed assets and fixed liability. Like what can be the source from fixed liabilities? Issue of share capital. Issue of shares means issue of capital. So capital is a fixed liability. Then take issue of debentures. Issue of debentures is also a source of income. Then we have sale of fixed asset. Yes, sale of fixed assets. These are fixed liabilities, these are fixed assets. So sale of fixed asset. Only sale comes here, profit comes in funds from operation. I repeat, sale of fixed assets comes in fund flow statement, and profit from sale of fixed assets comes in funds from operation. So there are differences. Now like if a machine of 10,000 you are selling for 15,000, you are making a profit of 5,000. 5,000 should be recorded in funds from operation and you are selling for 15,000, remaining and your 15,000 should be recorded here in fund flow statement. Sales proceeds are 15,000, profit is 5,000. So 5,000 will be recorded in funds from operation and 15,000 will be recorded in sale of fixed assets. Then next is what? You remember we prepare the schedule of changes in working capital. I had told you all the purpose behind preparing schedule of changes in working capital is to find out net increase or net decrease. So whatever net increase, net decrease we get, we record it over here. Net decrease is a source of income. Net decrease. Now there may be a question in the mind of viewers that how net decrease in working capital is a source of income. Net decrease in working capital takes place when liabilities increase. Net decrease in working capital takes place when current liabilities increase. Current liabilities increase in the sense we get credit, we get some cash. So that's how it is a source of income. I hope you all are clear. So net decrease is a source of income because current liabilities increase. Current liabilities increase in the sense creditors or cash in on credit basis or goods on credit basis, bank overdraft, all these things increases. So when they increase, some cash or some sources remain with us for a long time. That's why net decrease in working capital comes under the sources of funds. So if you get net decrease in working, schedule of changes in working capital, net decrease is recorded under sources of funds. Then next is your funds from operations. Now when I had told you all funds from operation is the only internal source of fund. So whatever funds from operation you get, that should be recorded here. Sometimes we have profits, so they are called as funds from operations. Sometimes we face losses, so they are losses from operations. So funds from operations is a source. We are making profits, money is coming in. So funds from operation, when we get profit, funds from operation is when we get profits. If there are losses in the business, it is called as losses from operations. So funds from operation is also a source. Decrease is also a source. Now what items we have discussed in the sources, the opposite items of this will come in application. It is as simple as that. So here issue of shares, what can be, where we can apply the funds? If issue of share is a source, redemption of shares will become an application. Redemption of share capital will become an application of funds. Then issue of debentures is a source. Then redemption of debentures will become a application. Sale of fixed asset is an source. Then purchase of fixed asset, again funds are going out, so it becomes an application. Now one more item that I had not taken here is long-term loans. Okay, long-term loan. When you take a long-term loan, students, money is coming in, so there is source, then it becomes a source. And similarly, repayment of loan is an application of repayment of long-term loan. Long-term loan is application of funds. Then lastly, increase in net increase in working capital is application of funds. Now how net increase in working capital is application? Net increase in working capital in the sense when working capital increases only in one case, where current liability is fixed and current assets are increasing. When current assets like stock, debtors and your bills receivable increases, the money gets blocked into these items. So that's how current assets are increasing. Money is blocked, money is not coming, funds are blocked. So net increase is taken as application. I hope this is clear. Net increase means increase in the current assets. When current assets increases, money gets blocked, and when the money or funds get blocked, it is equal to application of funds. Then funds from operation is a source. So losses from operations will be an application. Losses from operations will also be a application. So now the total of sources and the total of applications should match. Only when the applications total and the sources total matches, only then the sum only when sources and application tally, that means you have solved the sum right, or something is wrong with your solution, or something is wrong with the question. I hope you all understood this format. Please take down the format or try to solve it by yourself. Now I'll be solving one full problem, one full-fledged problem, a comprehensive problem on fund flow statement, wherein I'll be preparing schedule of changes in working capital, fund flow, funds from operation and fund flow statement all together, and step by step I'll be going step by step as per the question, as per the information given in the question. So let us quickly move to the solution. I'll be reading the question. The question will be displayed to you all on the screen, so you all please pay attention. So the question is, prepare fund flow statement for ABC Company Limited from the following information for the year ended 30 September 1998. Now you are required a comparative balance sheet of ABC Limited is given. 2 years data is being provided, so it is a comparative balance sheet. And just you can see, you can look at the balance sheet of ABC Limited. It is given that share capital, okay, the dates are 30 September 98 and 30 September 97. So the year ending dates they have shuffled. Please pay attention and just observe that 97 is coming later, 98 is coming before. That means the current year ending column is shown first and the previous year ending column is shown next. So the first item in the balance sheet is share capital, reserves, share capital. At the year ending it was 50 lakhs, at the year beginning it was 40 lakhs. Students, this is a fixed liability and it has increased. See, year beginning it was 40 lakh, year ending it is 50 lakh. So year beginning when it is 40 lakh, year ending it is 50 lakh, that means a fresh issue of shares was done in the year 1998. So this will come in the statement of fund flow, in the fund flow statement. Then reserves and surplus. Reserves and surplus is nothing but profit. So opening profit is 5 lakh, closing profit is 15 lakh. So the difference is 10 lakhs. So 10 lakh is the profit made during the year. Next is secured loans. Secured loans, opening balance is 40 lakhs and closing balance is 35 lakh. That means the loan has reduced. When the loan is reduced, that means the liabilities are paid off. And this is a long-term loan, secured loan it is. That's why it will be taken in the statement of, fund flow statement. Then current liabilities, 50 lakh and 60 lakh. So current liabilities opening were 60 lakh and closing are 50 lakhs. So current liabilities are reduced, but current liabilities come under schedule of changes in working capital. Then we have assets. Fixed assets, opening 30 lakh, closing 31 lakh. Opening 30 lakh, closing 31 lakh. So that shows what? There is an appreciation. See, closing, opening is 30 lakh, closing is 31, means the value of the asset is increasing. So we will take this 1 lakh as appreciation in the value of asset. Then next is investments. Investments at the beginning of the year there are 0 investments. At the end of the year 1,50,000 is the investments. Since they have mentioned the current assets below investments, this will not be treated as short-term investments. Short-term investments are those investments which will be paid off within the year. So this year we have purchased, we don't know exactly whether they are short-term or long-term, so it is better to take them as long-term investments. Then next is cash and bank balance, 2,50,000 and 1,25,000. 1,25,000 is opening balance, 2,50,000 is closing balance. So the difference will be taken in the schedule of changes in working capital. Then stock, stores and work in progress. Sundry debtors. Opening it was 35 lakh and closing it is 40 lakhs. So debtors are increasing. So this also will come in the schedule of changes in working capital. Then next is in the paragraph, the net profit after adjustment in respect of provision for dividend taxation was rupees 1 lakh for the year. So after whatever net profit they have arrived at is 1 lakh rupees, and that is after paying off or after providing for dividend and taxation. So the net profit during the year is 1 lakh. If they would have not given us this information, we would have taken the difference between reserves and surplus, 15 lakh and 5 lakh. The next adjustment is there was addition to fixed assets during the year amounting to rupees 4 lakh and depreciation for the year was rupees 3 lakh. Now just look above to the fixed assets. Opening value is 30 lakh and closing value is 31 lakh. That means during the year 4 lakh has been added to fixed assets. They have said addition to the fixed assets. That means additional fixed assets of 4 lakh rupees were purchased during the year. So these purchases will be recorded when we purchase fixed assets. There is application of funds. So this 4 lakh will be recorded in application, and 3 lakh rupees depreciation will come in funds from operations. But here what I want to tell you all is, see, opening balance is 30 lakh rupees and 4 lakh extra machinery, extra fixed assets. So 34 lakh is becoming the total. 3 lakh is depreciation. When from 34 lakh, 3 lakh if you deduct, 31 lakh is remaining, and that's how we have got our closing balance. So this 1 lakh rupees extra is appreciation in the value of asset. I hope you all understood now. So let us get started. This is your schedule of changes in working capital. The purpose is to prepare to find out net increase or decrease. So 1997 opening balances and closing balances of current assets and liabilities I'll be taking, increase and decrease I'll be recording. Then funds from operation, net profit during the year I have written. So for non-fund items debited to P&L account will be added, and non-fund items credited to P&L account will be deducted. And in fund flow statement, sources and application. So this is the structure of fund flow statement. You'll have to draw this, keep it ready, and as per the information given in the question, we have to go on recording the items one by one. So let's get started. Look into the question. The first item that ABC Limited has given is share capital. Share capital has increased from 40 lakh to 50 lakh. That means there is a fresh issue of shares. Issue of shares means when we issue shares, we get money from the public. So it is a source of fund. So issue of shares is 50 lakh minus 40 lakh. So it is 10 lakh. Then next is reserves and surplus. I had told you all, if reserves and surplus, if net profit during the year was not provided in the question, then this difference in the reserves and surplus opening and closing balance we would have taken. The difference in the opening and closing balance would have been taken as net profit during the year. But since net profit during the year is 1 lakh rupees, that means difference in the reserves and surplus is a source of income. So difference in reserves and surplus will be taken as source of income. Reserves and surplus. So the difference is 5 lakh minus 15 lakh minus 5 lakh, more value. So it has increased. That's how 10 lakh rupees extra is coming in the sources. The next is secured loans. Secured loan is a long-term loan, students, and it was 40 lakhs in the beginning, and in the closing it is 35 lakh. That means 5 lakh rupees loan is being paid. When we pay loan, it is application of funds. So repayment of loan will come in application of funds. The repayment of loan, it is 40 lakh minus 35 lakh. 5 lakh is the repayment that has been done. Next is current liabilities. I had told you all current liabilities and current assets will come in schedule of changes in working capital. So let me write here current assets. I hope this is visible to you all. Current assets and current liabilities. So like this we write the head. I just push the board with that side. So these are current assets and these are current liabilities. So in the current liabilities, altogether total current liabilities have been provided. So current liabilities total opening is 60 lakh, closing is 50 lakhs. So that means what? The current liabilities are decreasing. But if you all have watched my previous video, I had clarified to you all that current liability and working capital has an inverse relationship. That means when current liabilities increases, the impact on working capital is opposite. It increases. So 10 lakh rupees will come in the increase column. Next is your assets. On the fixed assets are fixed assets. In that fixed assets, opening is 30 lakhs and closing is 31 lakh. So let me tell you all how we got 31 lakh. Opening balance 30 lakh plus 4 lakh rupees additional fixed assets they purchased. So purchase of fixed asset will come here. So the adjustment and the transaction both together we will be solving purchase of fixed asset. So opening balance was 30 lakh and they purchased fixed asset. They purchased fixed asset of 4 lakh. Purchase of fixed asset we invoice payment of cash. So it comes under application of funds 4 lakh rupees. So 30 lakh plus 4 lakh it becomes 34 lakh. And they have charged a depreciation students of 3 lakh rupees. So depreciation is a non-fund item which is debited. We have to add it back. Depreciation on fixed assets. Depreciation on fixed assets 3 lakh. So 30 lakh was opening. We purchased 4 lakh assets, 34 lakh minus 3 lakh depreciation, 31 lakh remain. That's how the closing balance of fixed asset has come to 31 lakh. So the difference between 30 lakh and 31 lakh is of rupees 1 lakh, and that 1 lakh is appreciation in the fixed assets. And appreciation in the value of fixed assets is credited to P&L account. So the items that are credited to P&L account are to be deducted. So appreciation in fixed assets. Appreciation is 31 lakh minus 30 lakh. So all the transactions relating to fixed assets we have done. I hope this is clear to you. 4 lakh has been recorded as purchase of fixed assets in the application of funds, and depreciation is recorded as non-fund item in funds from operation, and 1 lakh rupees difference is recorded as appreciation in the value of fixed assets. Then next is investments. We still don't know whether they are short-term or long-term investments. As I told you all, if we have purchased it at the beginning of the year and at the end of the year if we are selling it, that means it is short-term investment. But here at the end of the year we are purchasing it, so nothing is clear. So we will be considering it as a long-term investment. Otherwise, if we consider it as short-term investment, we have to take it as a current asset in working capital. So we will be considering it as a short-term investment, long-term investment, and we will be recording it in funds flow statement. At the year end, we have investments. That means we have purchased investments. So when we purchase investments, it involves payment of cash, and that means there is flow of application of funds. So purchase of investments is application. Purchase of investments 1,50,000. Now we have current assets. So current assets, cash and bank balance. Cash and bank balance. So cash and bank balance, opening is 1,25,000. Closing is 2,50,000. So I had told you all there is a direct relationship between current assets and changes in working capital in my previous video. So direct relationship in the sense when the current assets are increasing, changes in working capital will also increase. So current assets are increasing to the extent of 1,25,000 rupees. Then next item is stock, stores and work in progress. So your stock, stores and work in progress, opening balance is 78,75,000 and closing balance is 75 lakh. So there is a reduction of to the extent of rupees 3,75,000. Direct relationship, there is a reduction, so we write it in decrease column. The next item is sundry debtors. So sundry debtors, opening balance is 35 lakh and they are increasing to 40 lakh rupees. That means there is increase in sundry debtors, and increase will have a direct impact on increase in current asset will have direct impact on working capital. 5 lakh rupees increase in working capital. Okay, so this is it. All the transactions have been done. Next one adjustment is remaining, that is of net profit, and net profit is after charging dividend, provision for dividend and provision for taxation, 1 lakh rupees that has been taken over here. So depreciation and purchase of fixed asset adjustment we have already done. So almost all the transactions are over. Step by step we have to close all these statements. First we will be closing this, then this, and then this. So here what the purpose behind preparing schedule of changes in working capital is to find out net increase or decrease. So we will find out which column total is more. So the total of this column is more because 10 lakh, 15 lakh, 16 lakh, 25,000 is the total. 16 lakh 25,000 is the total. Here it is only 3 lakh 75,000. So the difference will be 12 lakh 50,000, and this, see, increase column is more. Increase minus decrease, we get net increase. So net increase in working capital is 12 lakh 50,000. I had told you all increase in working capital happens, increase in working capital is due to increase in current assets. When current assets increases, money gets blocked into the current assets. So increase in working capital is taken as application of funds. Increase in working capital. Increase in working capital, 12 lakh 50,000. So we have closed the schedule of changes in working capital. Now we are supposed to close this. So 1 lakh plus 3 lakh, 4 lakh, and 4 lakh minus 1 lakh, again 3 lakh. So 3 lakh is funds from operations. I had told you all while giving the format, funds from operations means profit, losses from operations means losses. So funds from operations, since it is profit, it is a source of fund, so it will come in sources. Funds from operations, 3 lakh. This is it. So the total sources are, this should tally, students. If this tallies, your fund flow concept is correct. 23 lakh, sources are 23 lakh. Okay, application. Application is 10, 13 lakh. Okay, applications is also, total applications are also 23 lakh rupees. So this is the entire solution that I can show you all. So I hope the solution is clear to you all. So this was the simplest problem on fund flow statement, step by step, by considering all the transactions as per the question. I have solved this question. Some 2 more questions are there. I'll be solving them in my upcoming videos. Hope you understood the solution, and please keep watching my channel. Please share, subscribe and like it. Do comment and tell me what improvements you need in my videos, and please stay tuned with me. Stay home, stay safe, enjoy your quarantine and keep learning. Thank you. Have a nice day.